Hello and welcome to Brownfield's weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
It's going well, Will. How are you today?
Doing all right. Been a little bit under the weather the last few days, but I think that's been going around because, last week you were already battling some stuff, and
Sure.
I
Yeah.
guess you found the path forward. Now I just got to follow suit.
There you go. There you go. Sleep, rest, liquids
There you go.
certainly helps.
Yeah, no surprises there. But I have been some surprises, I guess. Like at least within the weather that we've seen right now. I think yesterday here in central Ohio, it got up to 73 or 74 degrees. And it's been getting kind of warm there in central Missouri as well.
Yeah, we had a couple of days in the low 80s last week, and we also had some cold days. I think we had one day, I think we had about a 70-degree swing, a
So
60-degree swing. So,
that's pretty nuts. But yeah, now talking about heating temperatures in the Midwest, we saw some slight warm-ups within the market over the week. So I'm going to give you a quick rundown on prices that we've seen. May 24 corn is up 9 cents at 4.30. December 24 corn up 6 cents at 4.63. That May 24 soybean contract up 10 cents, 11.55. November soybeans up 17 cents at 11.46. Soybean oil on a cents per pound basis for May up 0.15 cents at 45.17 cents per pound. Soybean meal by the short ton for May up $4.90 at $333.50 per short ton. That May wheat crop down 10 cents, along with that July wheat crop down 10 cents at 5.64 and 5.67. And then crude oil for May up $1.08 per barrel at 78.17. So Ben, I guess on a positive note, at least minimal losses. Only looking at the wheat side and everything else, fairly sideways to slightly positive. So, what are we seeing coming into this week?
well, certainly some higher closes last week, which for corn and soybeans is kind of a rarity. It seems the last couple of months. So if you're a holder of grains, you're looking at that saying finally some relief in the right direction, or at least for those that still have more corn and soybeans to sell. My anticipation is we're starting to see what I call the start of the spring rally here. I'm not exactly sure how long this is going to last. I think we have a little bit of an opportunity to add 20, 25, 30 cents into this market. But I don't expect this to last very long before we start seeing burdensome stocks continue to weigh on these markets and maybe pull us back down lower. So
Man, Ben, you always have to bring the bad news, I swear. But
yeah, I do.
that
It
there's
was fun. We had a good 3-year run of higher prices. I guess again, higher run if you're a grain and oilseed producer, not necessarily if you're a livestock feeder. But we had a good couple of year run here.
Yeah, well, and it is kind of tough to think about how the market is obviously very cyclical, and you see these patterns, follow each other. But it is tough once you factor in, you saw that higher run of prices, and then input costs crept up to match, saying, hey, well, we want to capture some of that value too. And those inputs, they don't just drop as quickly as the market can, in a several month period there. And I know we've talked about that here in the last couple of weeks on managing that, as a producer. But I guess, Ben, before we really dive too deeply into today, what can producers do, I guess, early in the season or just throughout the season to try and manage their costs as sternly as possible, looking at the situation that we're in?
Sure. So, in the last couple of weeks, I've seen a lot of anhydrous go out on fields across the state of Missouri. It's been warm. We've had, almost near perfect conditions for it. It's felt like April in some cases. And so we have seen a lot of field work be done. That is maybe a little bit, I don't want to say concerning, but I'm starting to get maybe a little hint that we might see a little bit more corn acreage than what I anticipated in the Western Corn Belt. I thought with some of these profitability and measures relative to crop, I thought maybe we'd see some stronger soybean acreage just on that profitability notion. But the amount of field work and anhydrous I've seen go on in the last couple of weeks, certainly I think signals to the dry, warm weather we've had, but I think also that we might see a little bit more corn acreage. So, as we're here in the spring, and you asked me this question about what producers can do, right? Like, if you're going ahead and you're saying, okay, I'm thinking about producing corn, well, now I'm going to challenge you to start looking for these opportunities in that new crop corn picture to pick up some revenue. Is it making sure that you at least have some type of safety net through crop insurance, even though crop insurance guarantees aren't all, are quite a bit lower this year? Do you have those crop insurance guarantees under you? And then the second part of this equation is, making sure you're applying the inputs that you need to make sure that you're generating a yield out of that crop, but not overspending, right? So, um, it is true that you got to spend a little bit of money to at least get a yield. And certainly we don't want to, pull back all of our crop protection away from that in fear that we'd have a disease or a pest pressure that would come about. But, being smart about what we need and thinking through the return on investment for these applications.
I think that's very well put, and something that farmers really need to be focusing on the short term, looking at this year, looking at things that could impact corn and different I guess fuel based crops or crops that can be used for fuel items within ag moving forward. We're seeing some mixed signals, or maybe not even mixed signals, just hesitancy to release some points from the Biden administration talking about the greenhouse gases, regulated emissions and energy use and technologies, or their GREET model, looking at how they're going to advance certain fuel standards, looking at sustainable aviation fuels. This has a direct impact on agriculture and ag producers there, as ethanol could be a big player in that, depending on how these regulations go. So, Ben, what does that tell you that, the Biden administration, they had an initial March 1st deadline for themselves, and they've pushed that back. And, I guess their idea was measure twice, cut once when looking at these regulations. But what does that signal to the ag sector when they're so hesitant to release what their plans are?
I don't know if it really tells me much. This is kind of consistent with almost every other, fuel rollout that we've seen. Is that there's kind of an initial self-imposed deadline, and a lot of times it doesn't make it. Like, I can't tell you how many times we're supposed to had, the renewable fuel volume obligations, or those RVOs for the renewable fuel standard, right? For the past two administrations, if not the past three, right? Those were supposed to come out in November, and it was often that they were coming out later than that. And so this kind of fits into that same category of, just a target didn't make the target, so we'll shoot for a later date, right? However, you mentioned, so let me just say, I don't know if it tells me a whole lot about the policy that's coming out. It could still be supportive for agriculture. It could also move against agriculture, right? Like, I don't know if it's necessarily telling me one way or the other, because of history here. But you are right. Like, this has the opportunity to be a big deal for especially the corn-based ethanol industry, because really this gets at the heart of taking corn-based ethanol and turning that into now a fuel source that could be used for the aviation industry. And that's a big market. And it's different than the ethanol industry, because the ethanol industry is largely, especially domestically here in the United States, largely geared towards our light fuel vehicles. So these are, cars, trucks that travel the road, that you and I drive and all of our viewers drive every day, right? Like, that's what we're talking about here. And that market has been relatively flat to maybe even slightly declining as fuel consumption starts to drop. Conversely, the aviation industry presents a whole new frontier of being able to supply that market. And so, while we see opportunities and pathways for vegetable oil products like the soybean industry and a couple other products, this is really a potential for the ethanol industry to also be a part of that growth area and be a part of that sector as well. And so this determination of what type of emissions model to use is important. But even once we get the model, I'll remind people that it's still going to take some changes in terms of how we produce ethanol. We still got to shave some emissions off the ethanol production. And it's also probably going to require some producers to make some changes in terms of how they produce the corn that then ultimately gets produced into ethanol. So getting the emissions model is really just the first step kind of down this road of can corn-based ethanol qualify for sustainable aviation fuel.
Well, and it's tricky when we look at how these types of regulation releases or plans will impact the market directly. Like you said, we don't know if it's going to be in favor of ag producers' interests or against them yet. And even once these are released, it's probably going to be some version of mixed. In most cases, there's good, highs and lows within these things. But looking at regulations like this, often it's a much more long scope, larger scope issue. And so it might not affect the direct and immediate short-term fundamentals of the market. So when you see these regulations come out, what are your expectations on how the market may react and might digest these reports? What's kind of the standard, I guess, for that?
Yeah, so I'll give you an example here. So last week or a week and a half ago, the US EPA granted 8 governors of 8 states the right, or agreed with them that there should not be a ban on E15 use during the summer driving months. That's something that the Midwest governors have been advocating for a couple of years. For 3 years now, we've had temporary exemptions to where we can use E15 during the summer, but that didn't necessarily provide the long-term clarification to invest in the technology for year-round use. We now, as of a week and a half ago, we now have, clarification that we're going to be able to sell E15 year-round, but it's going to be delayed until 2025. And so I think there was some excitement about the possibility of, hey, now we can maybe sell some more E15, which then will drive corn demand, but it's going to start in 2025. We also still need to build some infrastructure. And I think that's how we've seen all of these announcements. The tax credits that we're talking about here were originally passed in the Inflation Reduction Act, and it's taken us almost a year and a half now to get to a point where we're talking about, well, what actually qualifies, what feedstocks actually qualify for these tax credits to be able to be produced into fuel that helps drive demand for grains and oil seeds. And so it takes a while, and so the initial reaction usually is positive, but then we start to moderate and say, okay, let's talk about the horizon, how long this is going to take.
All right, Ben. Well, moving back into what we can look at here in the immediate future, what should farmers and ranchers be paying attention to this week?
Yeah, so it's a fun week. It's a full week, I guess is what I should say. So I'll start on Wednesday of this week. We've got a couple of economic reports coming out here at the start of the month that really will be kind of the last set of economic data that the Federal Reserve will use to talk about inflation or interest rates during their March open market committee meeting. And so we've got the January jobs report. That includes unemployment numbers, hourly wages that'll come out this Wednesday at 9 a.m. There's a lot of attention on this because the February one came in hotter than anticipated, if you remember right. And so is that just a holiday blip, or is that a trend that we're going to see starting to build back into the market? So those will come out Wednesday morning along with the ethanol report. We got export sales on Thursday. Then Friday is a big day because that's the updates to the USDA's supply and demand estimates. Again, at this time of the year, we're only talking about the old crops of 2023, 2024 supplies and demand. Little changes expected there, but certainly an opportunity to maybe get a better feel of if we continue to see deteriorating export demand for both corn and soybeans. Soybeans being the one we're most interested with on the deterioration, but corn, also has seen a couple of months here of increasing exports. At least expectations. And so do we continue to see more exports, the same, or maybe did USDA overshoot it a little bit? So that'll be this Friday, a big day on Friday when we get updates for the month.
All right, Ben, it's always a pleasure to have your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can check us out at brownfieldagnews.com. Thanks again, Ben. I'm Will Robinson on Brownfield.